Every few years, a pattern appears on Bitcoin's chart that sends chills through the crypto world. Traders call it the death cross. It sounds terrifying, and it should. Because historically, every time it's appeared, it's marked the point where fear peaks and fortunes are quietly made. Right now, a 7-year death cross is forming again. And if history repeats, Bitcoin could bottom near $95,000 before launching to $145,000 and beyond. Sounds impossible? Let's dig into why this pattern could define Bitcoin's next massive move and how it might already be unfolding right under our noses. This is the Crypto Loop, where we uncover the deeper patterns shaping crypto's biggest moves. Bitcoin today sits at a crossroads. The market feels uncertain. Fear is creeping in, and confidence, the same confidence that drove prices past 6 figures, is fading fast. But if we zoom out, far beyond the noise of the daily candles, and look at Bitcoin's long-term rhythm, something remarkable begins to take shape. Every 7 years, Bitcoin experiences a phase of destruction and rebirth, and at the center of that transformation lies the death cross. Let's start with the basics. A death cross happens when the 50-week moving average crosses below the 200-week moving average, a signal that momentum has flipped bearish. Most traders panic when they see it. They think it's the start of collapse. But history tells a different story. In 2015, the first major death cross appeared after a brutal bear market. Bitcoin had crashed nearly 85%. Sentiment was crushed. Yet, just months after that cross, Bitcoin began an unstoppable rally from around $200 to nearly $20,000. Fast forward to 2018. The same setup. Another death cross. Another wave of fear. And again, the same outcome. A sharp correction, followed by one of the most explosive rallies in Bitcoin's history. And now, for the first time in 7 years, that exact pattern has returned. So what does that mean? Is Bitcoin destined to crash again before it takes off? Maybe. But here's where it gets interesting. Unlike past cycles, Bitcoin is no longer a fringe asset. It's being traded by institutions, held in ETFs, and monitored by governments. The game has changed, but human emotion hasn't. The same fear, the same disbelief, the same capitulation. The 7-year death cross acts less like a warning sign and more like a reset button. It flushes out the weak hands, redistributes the wealth, and sets the stage for a new wave of accumulation. And based on current long-term indicators, Fibonacci extensions, RSI divergences, and minor profit margins, that reset could happen around $95,000. Sounds strange, right? A bottom at $95,000. But in this new cycle, where liquidity and adoption are exponentially higher, what used to be unimaginable might now be the new normal. Let's break this down. The projected 95K zone aligns with the area where miners' profitability drops to near zero, a level that historically triggers minor capitulation, followed by sharp rebounds. It's also where long-term holders begin accumulating again. If Bitcoin dips into that range, it won't be panic that dominates. It'll be opportunity. Once accumulation begins, the same pattern that formed in 2015 and 2018 could repeat. A powerful recovery wave that pushes Bitcoin toward $145,000 and potentially even higher. But it won't happen in a straight line. It never does. Each rally begins with doubt, with fear, with people saying, "This time it's different." Yet somehow, the rhythm of Bitcoin, the cycle of despair followed by renewal, remains the same. Here's the truth. Charts don't drive markets. People do. The death cross is just a reflection of collective emotion. Fear crystallized into data. It's what happens when too many people lose hope at the same time. And ironically, that's what creates the perfect setup for a new bull run. When the market feels safe, opportunity is gone. When the market feels hopeless, opportunity is everywhere. That's the paradox of Bitcoin. It punishes impatience and rewards conviction. So while most see the death cross as a symbol of failure, history shows it might actually be the moment of greatest potential. Of course, patterns aren't prophecies. This time, macroeconomic conditions are vastly different. Inflation, global conflicts, and institutional trading all shape Bitcoin's behavior in ways past cycles never experienced. So yes, it could be different. But think about it. Even as the world changes, the one constant in every market is human behavior. Greed, fear, and disbelief repeat like clockwork. And that's why these long-term patterns matter. They don't predict the future perfectly, but they reveal how people react when history repeats itself. And right now, that history is flashing again. We're standing at a rare moment in Bitcoin's story, one where data and emotion collide. The 7-year death cross doesn't just test portfolios, it tests belief. It asks every investor the same question. Can you hold conviction when everyone else is losing it? Because when you look back, the people who saw the death cross not as an ending but as a beginning, they were the ones who caught the next great move. Maybe that's what's about to happen again. So whether Bitcoin dips to $95K, rebounds to $145K, or surprises us in a way no one expects, one truth never changes. Markets move in cycles. History rhymes. And every death cross is just another heartbeat in Bitcoin's evolution. The question is, will you recognize the rhythm or be caught in the noise? If you found this breakdown insightful, hit like, subscribe, and join us on the Crypto Loop, where we follow every twist, every signal, and every story that shapes the world of digital finance. Because in crypto, the end of one cycle is always the beginning of the next.